Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG CHRiSTCHURCH Radio with Dr. AYODEJI, an investment professional. This week, we focus on the March 2025 inflation numbers and expectation. Last week, the National Bureau of Statistics, NBS, released the Consumer Price Index (CPI) report for March 2025. The CPI measures inflation by showing the changes in prices of commonly used goods and services. By tracking these price variations over time, we can gain valuable insights into economic trends and the general cost of living. The CPI is calculated monthly, and inflation is expressed in two primary ways. One, by comparing prices of goods and services from March 2025 to March 2024 year on year, and two, from March 2025 to February 2025 month on month. According to the report, Nigeria's headline inflation rose by 1.05 percentage points to 24.23% year on year in March 2025, relative to 23.18% year-on-year in February 2025, halting the two-month consecutive decline after the CPI rebasing. On a month-on-month basis, headline inflation in Nigeria rose significantly to 3.09% month-on-month in March 2025, compared to 2.04% month-on-month in February 2025. Food inflation, a critical component of the CPI basket, was 21.8% in March 2025, compared to 23.5% year-on-year in February 2025. On a month-on-month basis, food inflation rose by 0.5 percentage points to 2.18% in March 2025 from 1.67% in February 2025. This month-on-month increase can be attributed to the Eid al-Fitr celebration demand and a reduction in food produce supply due to the commencement of planting season. Core inflation, which excludes agricultural products and energy items, increased to 24.43% in March 2025, up from 23.01% year-on-year in the previous month. This rise can be attributed to the increase in the Information and Communication Sub-Index resulting from the recent tariff adjustments by telecommunications providers, as well as health, education, furnishings, and household equipment, and clothing and footwear all rose faster on a month-on-month basis. This month's notable increase in the inflation rate can be attributed to several key factors. 1. The rise in petrol prices due to the temporary halt in the Naira for crude policy led to increases in PMS price. 2. Renewed pressure on the Naira traceable to the news around the Naira for crude policy and the drop in crude oil prices due to the global trade war. Expectations. In April 2025, we expect a slight easing of inflation influenced by the renewed commitment to the Naira for crude initiative announced on April 9, 2025, which resulted in the drop of ex-depot PMS price from 930 Naira per litre to 865 Naira per litre by Dangote Refinery. This will also alleviate some pressure on the exchange rate. Furthermore, the U.S. decision to temporarily halt reciprocal tariffs on imports from countries other than China for 90 days will aid in the anticipated moderation. Nonetheless, food inflation remains a major concern as the planting season begins, along with renewed insecurity in food-producing regions. Investment outlook. With an inflation rate of 24.2% year-on-year in March 2025, investors can achieve positive real returns. A diversified investment portfolio is crucial for financial stability and growth. Incorporating dollar-denominated assets can safeguard against Naira depreciation. Additionally, investors should consider high-yield Naira-based fixed income instruments like treasury bills and reputable commercial papers for attractive returns with lower risk. Investing in strong-performing Nigerian stocks with steady dividends can further enhance returns, offering both protection and growth potential in a shifting economic landscape. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to abo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.